What is up guys, my name is Ignas, welcome back to the channel. The CEO of Novartis, Vas Narasimhan, was invited on CNBC to discuss the company's quarter. They do have partnerships on manufacturing the COVID vaccine, but another part of the interview had my attention even more. Vas explained on the company's advances in cancer treatment. This is what he said.
We were really excited about this data. At the American Society of Clinical Oncology this year, we presented groundbreaking data on our LU-PSMA asset. What this technology does is it combines a drug with a small radioactive particle, microparticle, which then can target that radioactivity directly to the tumor. We saw very impressive survival benefits and progression-free survival benefits in prostate cancer patients. We've seen previously a similar effect on another cancer called neuroendocrine tumors. Our hope is now over time we could expand this across a range of solid tumor indications. We think at least a $10 billion market. We're the clear market leader. We've built the global infrastructure to take it on. So we hope to demonstrate over the coming years this will be a pillar of cancer care into the future.
So the company is working on innovation in oncology and taking market share there. I believe that with an aging society there will be demand for such treatment, so there is possibly quite some opportunity in both the company and the industry. So for today's comparison I have picked 3 large pharma names. These are Pfizer, ticker symbol PFE, Eli Lilly and Co, LLY, and Novartis, ticker NVS. In order to make the comparison possible, we will be looking into 8 different factors. Last 4 quarterly earnings results, annual revenue growth, analysts' price targets, forward price to earnings ratio, price to sales ratio, return on equity, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. The first factor will be the quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end the stock with the highest sum gets a point for this factor. So these are quarterly earnings for Pfizer, and Q3 of 2020 beat expectations, Q1 of 2021 beat expectations, and Q2 beat. So with 3 beats and 1 miss in quarterly earnings, we get a sum of 3. Quarterly earnings for LLY, and Q3 of 2020 missed expectations, Q4 beat, Q1 of 2021 missed expectations, and Q2 missed. So with 1 beat and 3 misses in quarterly earnings, we get a sum of 1. Quarterly earnings for Novartis, and Q3 of 2020 beat expectations, Q4 missed, Q1 of 2021 missed expectations, and Q2 beat. So with 2 beats and 2 misses in quarterly earnings, we get a sum of 2. Results for the last 4 quarterly earnings factor are in the table, and with a sum of 3, Pfizer gets the first point. Second factor is the annual revenue growth. As potential investors, we want to find that the revenues of a company are on a steady increase. We will take a look into the revenues of the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end the stock with the highest sum gets a point for this factor. So these are annual revenues for Pfizer, and going into 2018 there was a decrease to $40.83 billion US. Then into 2019 we had an increase to $41.17 billion, and into 2020 there was another increase to $41.91 billion. So with 1 decrease and 2 increases in annual revenues, we get a sum of 2. Annual revenues for Eli Lilly and Co, and going into 2018 there was an increase to $21.49 billion US. Then into 2019 we had an increase to $22.32 billion. And into 2020 there was another increase to $24.54 billion. So with 3 increases in annual revenues, we get a sum of 3. Annual revenues for Novartis, and going into 2018 there was an increase to $46.1 billion US. Then into 2019 we had an increase to $48.68 billion, and into 2020 we had another increase to $49.9 billion. So with 3 increases in annual revenues, we again get a sum of 3. Results for the annual revenue growth factor are in the table, And with sums of 3, both LLY and Novartis each gets a point. Third factor are the analysts' price targets. As investors, we want to check how far the current share price is away from the average price target of analysts. If the current price is under the average target, we will consider the stock as undervalued, and in the end, the company with share prices furthest away from the average analyst target to the lower side gets a point for this factor. So for Pfizer, we have 21 price target of analysts. They range from the lows of $38 to the highs of $61 per share. The average is at $46.03, and the current share price is at $44 per share. This means that there is still 4.6% room for the current price to reach the average target of analysts. For LLY, we have 20 price targets of analysts. They range from the lows of $193 to the highs of $315 per share. The average is at $262.24, and the current share price is at $230.42. This means that there is still around 13.8% room for the current price to reach the average target of analysts. For Novartis, we have 6 price targets of analysts. They range from the lows of $96 to the highs of $108 per share. The average is at $103.33, and the current share price is at $82.61. This means that there is still around 25.1% room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with most room for growth, Novartis gets another point. Factor number 4 is the forward price-to-earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. This is the standard price-to-earnings calculation, with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price-to-earnings ratio gets a point for this factor. For Pfizer, the forward price-to-earnings is at 12.22. Forward price-to-earnings for Eli Lilly and Co is at 27.17, and Novartis has a forward price-to-earnings at 12.24. Forward price-to-earnings ratios are in the table, and with the lowest value, Pfizer gets another point. Next factor is the price-to-sales ratio. It is calculated by taking the company's market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price-to-sales ratio gets a point for this factor. Pfizer has a price-to-sales at 4.44. Price-to-sales for LLY is at 8.25. And Novartis has a price-to-sales at 3.59. Price-to-sales ratios are in the table, and with the lowest value, Novartis gets one more point. Factor number 6 is return on equity. A high ROE shows that the company is managed well and that money from investors are handled efficiently. So in the end, the stock with the highest return on equity percentage gets a point for this factor. For Pfizer, the return on equity is at 18.35%. Return on equity for LLY is at 111.03%, and Novartis has a return on equity at 16.64%. Return on equity percentages are in the table, and with the highest value, LLY gets one more point. Factor number 7 is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they're actually being leveraged. So in the end, the stock with the highest current ratio under 3 gets a point for this factor. Pfizer has a current ratio at 1.47. Current ratio for LLY is at 1.15. And Novartis has a current ratio at 0.8. Current ratios are in the table, and with the highest value under 3, Pfizer gets another point. The last factor is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high yield may suggest that the company is sharing profits with shareholders, and that is a great income source that we as investors are looking for. So in the end, the stock with the highest dividend yield percentage gets a point for this factor. Pfizer pays an annual dividend of $1.56 per share, which is a yield of 3.55%. The annual dividend for Eli Lilly and Co is $3.40 per share, and that is a yield of 1.48%. And Novartis pays an annual dividend of $3.20 per share, which is a yield of 3.83%. Dividend yields are in the table, and with the highest percentage, one more point goes to Novartis. We can calculate the results, so Pfizer has 3 points, Eli Lilly and Co 2, and Novartis 4. This means that with a sum of 4 points, Novartis is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Are you buying into any of the pharma names yourself? Share your best picks in a comment below. If you are interested to know exactly when I buy or sell any stock, then consider memberships. By joining in, you will get access to Discord, where I share my stock watchlist and all the moves exactly when I do them. This could be a great option to track my buys and sells closely. Last week we did a stock comparison on 3 popular EV names from China, and there is also an update for our eToro stock trading portfolio. If you are interested in any of these, then click on the video currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing you all in the next one.